setting yourself up correctly, when you set yourself up correctly from the beginning, it avoids long-term problems versus if you set yourself up incorrectly in the beginning, it might be easier. Oh, I just made an LLC. Now I'm a business owner. Woo. And then you file your tax return. Next thing you know, they're like, oh yeah, we're going to go ahead and audit you because you made way more money. And yeah. Okay.
But we're told to get LLC as a business owner and just like do that. However,
it's great. It's great because you get the best of both worlds. So if you're going to run a business and have an operation, then I would say, be the LLC, get the extra limited liability protection for your assets, and also just convert it into an S corp. So in that case, we were talking about the second instance of the $100,000 case, $15,000, $300 extra tax bill you're paying, versus if you did it on an S corp, we could take $50,000 of that and deem that wages. So you only pay $7,650. The rest is just income. So you don't pay that. So you're just in that case alone, you're saving $7,650.
Okay, hold on. Let me just hold on. That was very important. I don't want none of this stuff to get glossed over because you're giving these guys so much important information. I really want to hone this home because I'm hoping that this episode is going to be something people can go back to continuously, right? And we're going to put very detailed timestamps on this episode for y'all. So 2 scenarios. You make $100,000, right? One is an LLC. One is as an S corp, right? Assuming you made the LLC, then you switched over to S corp. In the first scenario, where you're just a regular LLC working a job, let's say you make $100,000 extra right from your business, you are going to be subject to paying $15,000 in you said self-employment tax, right?
Self-employment tax,
automatic, without a shadow of a doubt. That's coming off.
Yep.
So you're going to only net about $85K, and that's before all the other taxes that come in, right? So 15K is already gone. However, if you had switched it over to an S corp, you would only be paying about half of that at about $7,600.
It's an automatic 7,000. Yeah, because I would say just let's take 50% of your 100,000 and deem that taxable for self-employment tax.
Okay.
Because you could do that on an S corp.
Okay.
And the IRS says you have to pay yourself a reasonable salary.
Yeah.
And a lot of guys don't do that, and they've been getting away with it. But I think now with Social Security and the situation that it's getting, we're getting a lot of little notices and stuff like that saying that, you need to, I think at some point the IRS is going to come back and probably claw back a lot of these returns that were S corps where the owner didn't pay himself a reasonable salary.
Okay.
And there's a way to do that. Like you should go on and see like what is really the market rate for that position.
Okay.
And the IRS can push and shove on that. But I think if you put something in there, more than likely they're going to be like, just leave it alone. Yeah. But if you put a big goose egg on there, they're going to be like, gotcha. Now we're going to get you. And how much did you take in distributions? Oh, you took 100,000. Okay, that's going to be W-2 wage. Now you owe us that plus penalties and interest, and it's a 25%
okay
for a misstatement there on top of the 15.3% plus the interest.
So we're talking about just off of $100,000 profit, you're saving $7,500 that you would have had to pay, double that if you had stayed as an LLC.
Right.
And then not to mention, and you can't, I guess, also with the S corp, you were saying that you set yourself up for better tax mitigation as well. As far as like, is it easier to write things off? Are there any other benefits?
They're about the same because both, if you look at a Schedule C on a 1040 and you look at the it's just basically a profit and loss statement.
Okay.
The only thing with the Schedule C, you don't have a balance sheet.
Okay.
But you have a balance sheet for the S corp. That's the major difference.
Okay.
But you still can, take the same deductions.
Should someone switch over to an S corp even if they're not a W-2 employee? Let's say they start their entrepreneur venture and they quit their job and they say, you know what, I don't even want to work a W-2 job anymore. I'm going all in on this.
So what I would say is, yes, they can. But I would say when given the opportunity, if you have an opportunity with whatever your employment relationship is with someone, and I'd say this to everybody, always side to be treated as an independent contractor. If you can negotiate where they can pay you as a 1099 independent contractor, then do it. And here's why, because by not doing it, you're getting a W-2 wage and you have very limited access to get your income down. But when you become an LLC and you're treated as an independent contractor, you basically open up your whole business to the whole tax code to take advantage to get your income as low down to near zero as possible. You can't do that with a W-2 wage.
Okay.
So if you have the opportunity, if you have a gig and you're like, oh, he's gonna, the guy said he'll pay me a W-2, put me on the books and pay me as an employee. And I always ask them, I say, hey, is there an opportunity for them to pay you as an independent contractor? And they're like, yeah, I could talk to them maybe. I'm like, well, then do it. Then do it.
Okay.
Then we have the whole tax book where we could just write everything off that they can't as an employee.
Right.
Gotcha.
You know,
And you know what? Now that I think about it, when I was an agent, right, and I had my W-2 thing, so they assign you, right, a 6 hour. I didn't like that gun. I was like, this gun sucks. So I went ahead and bought my own Glocks, right? But I couldn't write those off.
Yeah.
And I think years ago you could have been able to do it, but like by the time I bought those Glocks and switched over, you couldn't. And that was because I was a W-2 employee.
These are very limited. I mean, the only thing you do is like, you know, if you have a 401k with matching and stuff like that, you know, that's a different story. But if you have an opportunity, if they don't have any of those benefits, you know, like that, then just try to become an independent contractor. And most employers, excuse me, would opt for that because that's less liability on them. That's less hassle. It's just so easy. Like, oh, I got this guy. You know, just give him a straight check, give him a 1099 at the end of the year, and
wash your hands of it.
It's a lot, you know.
And they don't have to pay you benefits or anything, so it's better on their end too. So for the guys out, so should they always just switch over to an S corp? It sounds like to me, even
always.
Okay,
Yeah,
so even
if you're a business, always.
So even if you're whether you're a W-2 employee, well, you definitely want to do it if you're a W-2 employee. But if you're just an entrepreneur, serial entrepreneur, don't have a W-2 job, you could start as an LLC, but always at some point, if it's a business that's generating money, unless it's real estate, that's the only exception to this rule.
Exception.
You need to switch over to an S corp in almost every scenario.
Absolutely,
okay. That's fucking sauce right there, man. Yeah,
that's great.
Yeah, that's really life-changing information. And I'll tell you guys this from experience. I made that mistake where I had done it as I was an LLC, right? And I wasn't an S corp, and I was wondering why was I paying so much in taxes? And I'll never forget that first year I went to H&R Block. I think I made like $30,000 to $40,000 extra for the first year with my fitness business in 2019 because I had started mid-year, and I paid a bunch of taxes. And I was like, what the hell? And then it was because I was set up as an LLC and I had never switched over to an S corp.
Right. Let me ask you guys a question because I don't even know because I look at it differently. What's your view of H&R Block? Like before you knew me, going there as far as like them being a professional tax company to prepare your tax return. How did you feel about them? I
think if you're a guy and you have a regular job and you just don't want to deal with it, they're good to go to. But if you're an entrepreneur, you need you 100% need a legit accountant that deals with entrepreneurs.
I agree with you. And then, you know, because we over the past years, like we look at the H&R Blocks and Jackson Hewitts, you know, to see what they're charging and their rates to see how competitive we are. You know, everybody does it in our area.
Yeah.
So, you know, it's pretty much most areas are going to have pretty much the same level. But I noticed that H&R Block in our area, for instance, we weren't really saving any money at all.
Yeah.
And the thing with the H&R Block is like you have a person potentially that's only gone through a 13-week tax course and they're preparing your return.
Yeah.
So they have very little experience and you don't know it because they're just following whatever they, you know, like there's where I would never have someone after 13 weeks in my firm preparing returns for anybody.
Yeah.
I will have them preparing them, but I'll look at them. We have a level of review like, okay, you know, you prepare it. You're going to give it to so-and-so, and then I'm going to look at it. So we have levels of review. They don't do that at H&R Block. You're not getting
they're trying to get volume.
Correct. And a lot of these people, what they do is they take that course and then they'll do like spend a season there in H&R Block, and then they try to leave to go, you know, hang their own shingle or do their own side tax prep stuff. So then the next year you go back and you're getting somebody totally different.
Well, I mean, okay, you know what? Let's just use real world things here. So when I was an agent, right? That first year that I had done a tax return, I made somewhere between like 120 to 150 gross.
Yeah.
Right. Because I had my fitness business as well. I made 120K as an agent. I think I made about like 30 to 40K with my fitness business. And this is 2019, right, guys? Because I started the business June of 2019. And then I was also working as an agent, making about 120K per year. So we're talking about 150K gross. I paid that year, I think like 36,000 in taxes, right. 36,000 to 40K in taxes.
That, yeah.
And I think I showed you, hey, this is my 2019 tax returns, right?
Yeah.
Because the first year I worked with you was 2020. We paid just that same amount of taxes this year, making 10x.
I always do a comparison.
Yeah.
I'll do it side by side just to, you know, as a final check, and then I'll point that out. Like, wow, look at
guys. I made pretty much last year made over an M, right? And I paid about 36 to 40,000 in taxes. So I pretty much paid the same amount of taxes as I did when I was an agent with a W-2 job and just starting my business, making about 30,000, right? 150 gross, as I did making an M. And if that doesn't show you that fucking a guy like Steve knows what he's doing, right? Obviously all legal because I'm using real estate, I'm an entrepreneur, etc. I get heavy tax reduction. Then I don't know what does. I think H&R Block is great for a guy that just doesn't want to deal with it and is a regular W-2 employee, and it's easy. But once you start getting into real estate, you're a business owner, et cetera, and things get more complex, like H&R Block isn't going to do cost segregation for you.
No.
They're not going to do depreciation. They're not going to be able to, help you with writing off expenses for your business. So
no, it's not like you go to your H&R Block, towards towards the end of the year, my bigger clients, I'll send out notices and we'll sit down right before the year ends to see where they're at, to do some tax planning, and then to see if they need to buy more equipment, pull back, see where they're at, see if, make estimates, things like that. So, they don't do any type of tax planning. That's very important.
Yeah.
It comes in towards the end of the year.
Yeah. So, I mean, me and you've been on the phone before planning, like, hey, you should probably spend some money before the end of the year, etc. Any equipment that you want to buy, go pick it up now. I remember when we were buying the cars, pick it up now before the end of the year. Like, all this stuff is imperative because it will set you up, right, to pay a smaller tax bill in the future, guys. And again, this is all legal. I told y'all before, when you're an entrepreneur or if you're a real estate investor, what ends up happening is you are the cornerstone of the United States economy. Small businesses, real estate, small business, real estate, bam, you hit this corner right here and you're able to create jobs, create housing for people, and you get huge tax breaks. And that's why I was able to pay less taxes now than I did when I was an agent as a W-2 employee.
I think the allure is for H&R Block is that on some level it's streamlined and it seems to be easy option because you just go there, get in your documents, information, and they do it for you. But ease of access leaves you open to missing out a lot of opportunities. So
right.
I think that by itself.
They do tremendous marketing too as well. So they're out there.
They got numbers.
Yeah. I think they're talking about real estate. The most millionaires are in
90% plus.
Estate.
Yeah. Should we talk about because they've asked me this question a bit. You want to talk about our strategy that we're doing right now with the real estate?
Sure. Yeah.
Fuck it, we'll do it. Okay, we're gonna give y'all some sauce. Okay, we're gonna go ahead and kill the Twitch, Twitter, Facebook, kill everything except for Rumble and YouTube. I'm gonna tell. I've never revealed this, but I'm gonna tell you exactly what I'm doing with Steve right now as my tax strategy for real estate for all you guys out there that want to invest in real estate, etc., and set yourself up for success.
Yeah, mine's a great guy, man. Awesome guy.
I'm giving y'all,
Shout out to Myron.
Yeah,
and like the video.
Yeah, and like the video, by the way, guys, too. So this is what we're basically doing, guys. Once I bought like my 13th or 14th property, I pretty much got on the phone with Steve and Roger. As you guys know, Roger is my real estate agent. Steve is my accountant. And we started like strategizing, like, okay, we need to put this stuff in a way where I'm not going to, so I can mitigate risk, God forbid a tenant tries to sue me or whatever it may be. So we started putting all the businesses into LLCs, which Steve was describing to you guys earlier. But and each house, right, it's very simple. Let's say you own 123 Main Street, make an LLC, 123 Main Street LLC, bam. And then just go by the address name for each house that you own, right? And then each of those houses operates kind of like its own entity where that money's coming in. And Steve described it earlier, why it's okay, appropriate for an LLC because it's considered passive income, you said, from a tax standpoint.
Correct, yeah.
So you don't necessarily have to S-corp it. Then I took the next step, guys, and this is where the game changer is. I went ahead and made an overarching LLC.
Correct.
Out of Delaware. Okay. And that Delaware LLC holds all the other LLCs that I own. So that main LLC is a real estate LLC, and that holds all the real estate property underneath it. So it's kind of like an umbrella corp that holds all the others. And I guess we could talk a little bit about the strategy there. Why that's
so. I mean, that's important because you're separating all your assets for liability purposes. Mm-hmm. Now, necessarily, not that doesn't provide any real tax savings in it because you're already structured properly. But another opportunity too is, and I know you spoke to the attorney, and that was a fantastic strategy. Another one that you could do too is there's like a revocable trust as well too, to encapsulate that. So that's probably the next step. Yeah. Because now you have your operation business and you have all your real estate. You're going to have some other assets that you're going to be holding in there. Mm-hmm. So then that's the next level that we'll talk about is, to get an attorney to do the trust. Yeah. So let's say something should happen to you, and then you can avoid probate and things of that nature. Yeah.
And Delaware, I think the reason, because my lawyer was suggesting Delaware, I think the reason why is because you guys are probably wondering, like, why Delaware? Because Delaware has a very good setup process, and everything is private. It's not like Florida where everything is out there.
Well, that's the thing with the trust too.
Yeah.
Because so you don't know, you can't go on public records and find out.
Yeah. Like Florida. Yeah. Florida is easy to find.
It's too easy. Yeah. It's too public. It's everything's out there. So yeah, definitely that's one of the major things that you that the benefit.
Shout out to trust, man.
Yeah.